The Nasdaq 100 pulled back as expected earlier in the week, which we called out in the last video. Price was not able to breach last week's high of 12,670, which resulted in the wedge pattern being retested. The level we called out in the last video was 12,040. The low of the retest, 12,047. This is a classic case of former resistance being tested as support. The pullback was driven by this headline. After Walmart spooked investors on Monday evening after the company cut its quarterly and full year outlook, saying that inflation is shifting consumer spending towards essentials and away from things such as clothing and electronics. We also had a bunch of earnings this week. Mega cap tech earnings from Microsoft and Google, with both missing on earnings and revenue, but despite this, both stocks rallied. Another sign of beaten down names having an oversold bounce. Additionally, Microsoft provided upbeat guidance which helped propel the stock higher. I've mentioned in previous videos, forward guidance right now is more important than the headline numbers, which is already old by at least 3 months, as earning releases refer to the prior quarter, so it's backwards looking, rather than forward guidance, which helps investors and traders understand any new information that can be priced into the stock. Facebook reported earnings that missed and painted a gloomy outlook, whilst both Apple and Amazon beat on earnings and saw their stock prices rally. Wednesday we saw the Fed raise rates by 75 basis points as expected, but it was the press conference from Powell that saw equities kick on higher. Fed Chair Powell said the central bank could slow the pace of rate hikes, which saw the dollar tumble and risk assets rally. In particular, the Nasdaq 100 outperformed on the comments. Traders are effectively pricing in that the Fed is done or nearly done with rate hikes, which has lifted risk assets. However, the following day, US GDP numbers came out, suggesting the US is in a recession, defined as 2 negative quarters of GDP. However, this definition is being debated as shown here. Now, the market is currently cheering the lack of expected future rate hikes, with a weaker USD helping. The caveat to this is that if US remains in recession for a prolonged period and company earnings begin to fall, the stock market will react and price this in. At the moment, this has not been priced in. Going back to the charts, we already spoke about the backtest of the wedge pattern, which has played out. So with price holding, we got our upside target of 12,800. Price hit a weekly high of 12,986. With the way price finished the week near the highs, I'd expect some follow through on Monday, with 13,050 to 70 being the next major area of resistance. The 1350 level has not been retested since the 5th of May this year. Downside support levels to watch, 12,800, followed by 12,670 and 12,520 will all now act as support, followed by 12,180. It is likely we get some sort of cooling off next week if price hits the 13,050 to 70 area, following the impressive rally we had this week. With that said, thank you for watching, and do hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.